Most indicators on the market need something to adjust or correct them. A second, third, or maybe even a fifth, some other additional indicator. Let's take a look. Most people use these kinds of tools. Yeah, I use them myself too. But what if I told you that I found one indicator that doesn't need any additional tools to work well on TradingView and as a result on your trading platforms? It's all because it perfectly shows where you should buy an asset and where you should sell it. And not once has it made a single mistake. It's just amazing. In this video, I'll show you this indicator in action. I'll explain its logic, and of course, we'll figure out how to use it. You're on the ViceFlow channel. Let's get into it. What's the issue with all sorts of indicators that other bloggers sell on YouTube? What's their main mistake, their main problem? And it's all pretty simple. The main problem is that any indicator needs to be adjusted by the readings of another indicator. And if you're lucky, that's just one indicator, but usually it's 3 or even 5 other indicators. You open a chart on TradingView and turn on one indicator, and basically, it gives you either a buy signal or a sell signal. But to filter all this out, you need to look at the readings of the second, third, and even 5th indicator. And so, the chart ends up cluttered with all these indicators. You've got 5 indicators open on the chart. Seriously, if the first, single indicator actually works, do you really need 3 or even 5 more additional indicators just to filter signals and show the right entry or exit point from the market from a position? Of course not. You just need one indicator that actually works. Sure, you can add a second or even a third indicator to a working one to help filter signals in the same proportion as others do it. But the thing is, this isn't based on a simple buy or sell signal. In other words, a signal to buy or sell. It's based on other indicators where each indicator can substitute for another. It doesn't filter signals like we discussed in the first case, which is what most bloggers on YouTube do. It doesn't filter these signals, but rather provides additional arguments in favor of the signal from the first indicator. If this sounds a bit too complicated to you, let's move on to the next point to solve this problem. There's an indicator that shows quite clearly where you need to buy. Green line, buy, buy, buy. Any touch of these points leads to growth, no matter what, on absolutely any asset on the daily and weekly time frames. And it's exactly the same for selling. Red line, we sell here, or sell here, and every time we lock in profit. Price movement from the red zone triggers a reaction in the form of a downward move. But actually, in order to act on that buy signal, you need to check the readings of 3 more additional indicators. And if 2 of the indicators show that yes, they confirm the signal from the first indicator, then the third one will say, no, you shouldn't enter. And as a result, you miss the signal, and you end up missing a pretty profitable one. But if it's the other way around, and you don't get confirmation from all 3 indicators, you enter on the signal, and it turns out to be a losing one, completely unprofitable. Let's look at a popular coin as an example, XRP. Every time the price touches the green line, there's a reaction in the form of growth, a solid reaction that always happens on the chart. It's the same with XRP coins, as we can see here. The red zone, once it touches the red zone, we see the same thing happen. Here, it touches the red zone again, and that's basically a sell signal. And as soon as the downward movement started, the price began to fall right away. And so far, the drop hasn't stopped for the XRP token. It's the same with Bitcoin. Let's take a look at the weekly chart together. We open up Bitcoin. Right here in investments, you can get 500 to 600%. In the previous case, there was a 1300 to 1700% increase. As for the red zone on Bitcoin, here, and here, every time the price reaches the red zone, that's a minimum drop of 35%. Or even a 50 to 60% correction. And there's really no need to double check this against other indicators because the red and green lines work absolutely reliably. Not a single mistake in the entire history. Really, it's an absolutely unique thing with no equivalent on the market. So all you need to do to start working with the indicator is just open it on TradingView, and that's it. You have a ready-made algorithm that hedge funds use to enter and exit their positions. And not once has there been a single mistake in the entire history. To start using it, just follow the link in the description, select the indicator on TradingView, and that's it. Everything's ready. You don't need to do anything else. Let's look at some examples with popular coins, say Litecoin. Let's check out the red zone. Every time, it works out with a solid reaction. Drop, drop. Every time there's a drop. Same thing with the green zone. Buy, 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 buy. And as you can see on the chart, every time from the setup, the minimum growth percentage is 60%. Accordingly, every time we can see that from the red zone, a correction happens, anywhere from 30 to 70% correction from the separated zone, with a minimum of 60% or even more. There is a 250 to 300% increase in Litecoin, and what could be better than consistently locking in profits at the red zone, or selling and opening your short positions, or on the other hand, buying every time from the green zone and locking in your long positions with a massive percentage gain in dollars. It's absolutely incredible. We can also look at the example of Ethereum, where every time from the green zone, we buy here, buy here, buy here, and get 50, 70, even 100% growth. A 220% increase in the second to last case, or the recent case, where we immediately saw a 40% profit reaction. Otherwise, it's the red zone. Here we get a 20% correction, here we get a full 50% correction, and here we get a 40 to 45% correction from the red zone. You don't need anything else. It's all as simple as can be. The red zone is the selling zone, where you need to sell. The green zone is the buying zone, where you need to buy. You don't need to filter it with the readings of a third, fifth, seventh, or even 10th indicator the stuff bloggers on YouTube are selling you. None of that is necessary. You can work simply and steadily using just one indicator, the most accurate, the only indicator that actually works in the crypto market. Why is it so good, and what makes it different from the others? That's actually a really interesting question. The indicator's readings depend on the actions of hedge funds and big capital, because the indicator actually shows a very simple thing, and that thing is as follows. We can see where people are experiencing maximum euphoria or maximum greed. If we're talking about the red line, and accordingly, if we're talking about the green line, that's where people are in the zone of maximum fear, apathy, and even hatred towards the crypto market. So as soon as the majority of people on planet Earth are in a state of maximum fear, deep apathy, and outright hatred, like, I just can't stand this crypto market anymore, it's exactly in this zone that big capital, hedge funds, and major players accumulate their assets, and after that, they push the price higher and higher. That's why every time we see a reaction from the green zone, and the same goes for the red zone. Maximum euphoria, Bitcoin is the new gold, cryptocurrency is a new type of investment that makes everyone rich. It's exactly in this zone, in fact, that big capital takes profits, because most people want to buy at this very moment, while big capital locks in profits and sells these positions to them in the red zone. And every time we see a downward reaction, a downward move, a correction from the red zone, and that's exactly why we don't need any extra. We don't need additional signals to filter whether entering the green or red zone is relevant. We can use additional indicators like a histogram, which actually shows where the divergence is. Usually, it matches up perfectly. Let's take a look at Ethereum. There was a divergence at the lower boundary of the indicator, the histogram oscillator, and after that, we saw it. The price was in the green zone, a massive upward movement, and the same goes for the red line. We had another divergence on the oscillator, on the histogram, and the price was in the red zone. You get a corrective move of a full 50%. In other words, the additional indicators do not filter the readings of the main, primary indicator. They simply show that the main direction has been chosen correctly and confirm the chosen theory, with the help of the green and red lines. And that's really the whole secret that most people can't grasp in the cryptocurrency market. I'll leave a link to the indicator in the description of this video. If you found this video helpful, be sure to give it a like and leave your comment. This helps promote the channel and motivates me to keep making videos. More content for you. This was Alex with you. See you soon on the Vice Flow channel.